We are jumping into Chapter 7. Chapter 7's a bit of a doozy of a chapter. This is all your taxes. So all the forms and, filing taxes, the April 15th, big date, all of that good stuff. Marcus?
How did we do the test?
I have not looked at them at all.
Has the other person finished their test?
One of the reasons I have not graded them is so many people have not taken it. We had so many absences on Friday. Xavier did finish his today. Hannah finished hers today. Like, Tyler was working on his. Anthony started his. Like, people are working on it. But when I have a lot of people who haven't taken, I just wait till they're all done. And I gave tests all day on Friday, so I started grading some of the others. And theirs was a 6-page test. Yeah, so I got a lot of grading to do. But I'll get there, I promise. All right, so guys, we're going to look at 7-1. We're going to spend today and tomorrow just to make sure we kind of get some basics down. I gave you the notes for today, and then I gave you a very thick packet. Guys, are you with me? Josh, stop destroying my eraser. All right, guys, I gave a very thick tax packet. That is printed off. These are the most recent tax tables. The 2017 tax tables will not be out until next semester. So we get 2016's tax tables. These are the official tax tables that the government uses when they figure out how much they tax you. Okay? So we will be using these. We'll be referencing them throughout this entire chapter. So don't lose that packet. Okay? All right. So here we go. So for today, this section's over tax tables, giant packet I gave you, worksheets and schedules, kind of like how they figure out how much taxes you should be paying based on how much you make every year. So we're going to look at expressing tax schedules algebraically. Don't panic, it's really not that hard today. And compute federal income taxes using those tax tables and tax schedules. So that's our basics for today. So who pays taxes? Everybody. Oh, there it goes. Everybody. The whole filing jointly, filing separately, singular, sometimes, I would say most often it is in your better, at least for me, for my personally, to file jointly with my spouse. Like, we've tried filing separately before, and we always get less back than if we do it jointly. And I'm not entirely certain how all of that works. So it has to do with, like how much money we make, because like together we're like over a certain tax bracket, and yeah, it just has to do with how much you make. I don't know. And then we got the kids also, so then like who claims the kids if we file separately, and yeah. So but yeah, you can, when you file your taxes, you can have them look at that, like if you do them yourself or you have somebody file your taxes. If you're married, figure out how much would you get back if you filed separate, and then how much would you get back if you filed together. For us, every time, it's always been better to file together. I don't believe so. Don't quote me, but I don't think so. All right, so guys, talking about taxes, and everybody hates paying taxes. It's awful, but you have to do it, because what are taxes used for? Right, you're absolutely right. Because think about it, guys, when you're running the city, the state, federal government, your police force, your firefighters, the space program, military, national security, health research, social programs, other government programs, all of that's run on taxpayer dollars. So all of that, everything that helps keep us safe, helps, keep our country what it is, it's all based on money that they get from paying taxes. So it's a necessary thing. Yeah, firefighters, police officers, we got a lot of you guys in here. Yeah. Some sort of taxes and stuff. I'm sure they have something similar. All right, so what are the different types of taxes? Because there's all different types that we pay. Property taxes, you know what those are? On property that you own, yeah. So collected based on the value of the property that you own. So most commonly, what is that based on? Your house, yeah. So obviously, the more expensive house you have, the more taxes you pay. But also, I'm going to tell you, it depends on where you live as well. When we moved from Findlay, we looked at, different places around the area. My husband and I, we both teach in Perrysburg. So we started looking in Perrysburg at houses and whatnot. And the taxes are insane in Perrysburg. insane. So like what we could afford, you know, like if we could afford X number dollar house in Perrysburg, I could afford way bigger house because the taxes are less somewhere else. So we ended up buying a house in Waterville because the taxes are not as high as Perrysburg. Yeah. They do not. Correct. They tax you on your livable space. Basements cannot be considered your livable space a lot of times because they don't have windows. Now, if your basement has windows in it, then a lot of times they can include that in your square footage. Yep. So then you probably could include that as your square footage in your house. So then you would be taxed on that. Yeah. So like there's like two sides to that. Like you want your house to be worth more and you want to include that. Like if you go to sell your house, you're like, yeah, I have, you know, this much bigger square footage, but then they're going to tax you more on it. So it's, you know, no. No, it's not legal. It's not legal. It's not safe. All right. So then we have sales tax. Sales tax, you guys pay that all the time every time you go to the store, based on the value of the items that you purchase. And you guys, what is sales tax for Lucas County? 7%. I don't know. Like I forever it was like 6, and then it was like 6.5, and like 6.75, and you know I don't even know exactly what it is anymore. I have to look. I think it's around 7%.
What is 7.2?
7.2. But yeah, like I had a conversation with my own kids. You know, mine they're 8, 5, and 2, so mine are little. But I mean, we went to the store. They had gotten some money for Halloween. My mom had given my kids $5. So we went to the store. They wanted to buy toys. Like, oh, it's $5. I'm gonna buy it. And I'm like, technically, you don't have enough money for that. And then they're like, I don't get it. Why? It's $5. So then I had to like explain tax to my kids. They just did not get that. I was a nice mom. I gave them each an extra dollar to cover the tax, but. Yeah. Well, now, what about gasoline? Is there tax on gas? Mm-hmm. There is. Now, granted, when you go to get gas, you know, if it's 2.39 a gallon, that 2.39 is including tax. Right. Yeah. Is it 2.60 that high? Oh. Gas keeps going back up. All right. And then income taxes. What's income taxes? Tyler? Good. That one's based on how much money you make, your salary. Collected based on the amount of taxable income you earn. Yeah. So when you get paid, you guys look and see what comes out, like your federal taxes, state taxes, Ohio taxes, city taxes. Yeah, they tax you like crazy. Harrisburg taxes. Harrisburg's property taxes are the worst. No? Yeah. We're going to look at like different incomes and how much you get taxed based on your income. And it's shocking how much money you just give away. It's painful. You're like, man, it's my money. I should get to keep it. All right. So who collects taxes? What's the government program? IRS. There it is. IRS, the Internal Revenue Service. Make sure you guys know what IRS stands for. Internal Revenue Service. Could be. Yeah, make sure it's really the IRS if you get a phone call. All right, you guys know the deadline for taxes, right? April 15th, when you have to file them. Now, when do taxes run, though? If they don't have to be filed till the 15th, when do they run from? Blank to blank. January 1st through December 31st. They do a whole calendar year. Yes, you need to file taxes every year. If you have a job, you file taxes.
taxes, we do like include the sales taxes, your sovereign citizen.
Nope. All right, guys. Filing status. This is the conversation Justin had brought up earlier. Okay. Filing status. It's a description of your marital and family status on the last day of the year. Okay. You must indicate your filing status on your tax return. And then we're going to talk about the different choices and what they mean. Yes.
Last day of the year, so if you got a divorce about, say, July,
Then
your status, you don't get any taxes.
no, because then you would file separately. You wouldn't file together anymore. Yeah.
I thought he was young. My cousin had 5 or 6 kids, and my aunt let, or my cousin let my aunt file 2 of her kids under my aunt Becky, and they're not living with her, and the IRS found out somehow. So now
You can get in big trouble
she
for that.
isn't getting any back for like 2 or 3, 4, 5 years.
Yeah. That's tax fraud. Yep. And guys, they do audit your taxes once in a while. I've been audited before. Like I file my tax return, go to get my, my return check back, and next thing I know, I got something from the IRS. I was randomly selected to be audited. So audited means they're going to make me prove everything that I claimed when I filled out my tax thing. So if I claimed that like I donated like $1,000 to charity, I better have the receipts to show that I donated $1,000 to charity. Do you know what I mean? Like they're going to come in, they want to see every little bit of paperwork that you have. You got to prove everything. Yeah.
Is it normal for, like, let's say divorced or like separate parents to take your child for like taxes, filing taxes 1 year and then the other
Yes.
year?
Yep, that's normal. Yeah, that's normal. All right, so you can file as single, which is unmarried taxpayers. So all of you right now, you would file single. Unless we need to have a conversation. Something I don't know about you guys. There's married, guys, married filing jointly, which is what my husband and I do. It's married people who fill out one tax return together. And we have found that it's always been in our interest to file together. Hey, you're trying to get as much money back as possible. Like, you're going to try every which way you can to try to get the most money back. I don't know if you guys have ever filed your own taxes or watched your parents file their own. Like, it doesn't bother me. Like, I file my own every year, but, like, going through the process and, like, entering in the info, and it starts out like, you're going to get this much back, and you get all excited. Then the time you finally put everything in, you're like, yeah, I'm not getting that much back. Like, it's a little depressing. All right. Married filings. Yes, most people pay somebody to have them do their taxes. Like H&R Block, it's a common one. If you're not, like for you guys, it'd be way easy to just do them your own. Because like if you get online, you can go to like TurboTax, H&R Block has things online. It literally will tell you, fill in the number from box such and such on your W-2. Like it is really easy. Yeah, I use TurboTax. But like me, like we do ours like itemized. Like you can just do a blanket, here it is, done in like 5 minutes. We do them itemized because like we donate money. We always donate items every year to like Goodwill. Like, we have schooling stuff. Like we have so many things that we itemize and we can try to get as much money back. So there's married filing separately. It's married people, but they file 2 separate returns, so they don't do them together. And again, I guess it would depend on how much money each person's making, whether it's in your best interest or not.
You say like one's like your husband is like a millionaire and your wife's not, so you do like that.
Yeah, then it might be better to separate the 2 of them. And then there's one called head of household. I'm not as familiar with this title, but it is a way to file. It's unmarried taxpayers who support additional people. So if you're not married, but yet you still have, if you have kids that you watch or you have family members that are under your care, things like that. So they're unmarried taxpayers. Then you would not be head of household. It's one person who's head of household.
My aunt
Well, like, let's say maybe you have foster kids or something like that, so you're head of household over either not your children, but you were still taking care of them. Maybe something like that. Again, I'm not as familiar with head of household.
But then again, she also has to file like separately. It's really odd, like weird. Like
All right, your annual tax changes as blank changes. Your income changes. As your annual income changes. To find the tax on your taxable income, you use a tax table or a tax schedule. Tax tables are easier to use than tax schedules, but with a little algebra, it's really not much algebra. I call adding and subtracting. You can use the tax schedule, and we're going to practice using those today. Okay? All right. Here we go. So Ron is single. He is using an IRS tax form and calculates his taxable income as $51,482. The instructions tell him to use the tax table to determine his taxes. How much does he owe? All right, now as we're looking at tax tables, and if you flip open your booklet as well, now this tax table, this is from the textbook, which is older, so it's not as recent, it's the ones I gave you guys. But they'll always have this look to them. Okay, so in the back packet I gave you and here, and they'll always have up here kind of like where we're talking money-wise. So if you flip real quick through your booklet, as you're flipping through there, you should notice different dollar amounts on the tops of those. All right, so if you open up to any part of this, there's tons of different tax tables on here. Okay, so I want to make sure we're clear. Maybe you only worked for like a month or less than a month, and then you got injured and couldn't work anymore. Yeah, yeah, I mean, it could be guys, 16-year-olds who didn't really work much. Right? But take a look, guys. I want you to see, though, how it kind of breaks down like 12,000, 13,000, 14,000. So as you're looking through this, and we'll be working on stuff today using this packet, but you want to kind of go and like, okay, how much am I making? Like in this case, he's making just over 51,000, so you would have to flip in here to the one that says 51,000 on it, and then you know that your numbers are going to be somewhere in that table. Okay, so there's a lot of tables in here, but they are separated very nicely, so you can find them. All right, but for right now, for this example, let's go ahead and use the tax table that's up here. So if he's making $5,482, now you got to be very careful. Look how these are separated by only increments of $50. So you need to find where he falls. So in this case, he's falling in between $51,450 and $51,500. So this is where his dollar amount that he makes, it falls into this range. Okay, this is called an interval, right? So he's in between this interval. So how much tax does he have to pay? Well, if you look over at the rest of all of these numbers, look at the top. Okay, there's single, married filing jointly, married filing separately, or head of household. So each column stands for something else. This told me Ron is single. So I'm going to go down the single column to the interval that he fell in, $9,213. No, that's how much he has to pay. Okay, but I want to make sure we're clear on how these tax tables are read. Also, take a look at the top, because I want to make sure we're clear on something else. Do you see how 51,450 shows up in two spots? Like they're always like that? Look at the top. It says at least, and then but less than. So if I made, we'll say 51,600, which interval would I fall on? If I made 51,600, would I fall this one or this one? Top one? Bottom one? It'd be the bottom one. It'd be this one. Because this one says, but less than 51,600. So if I make 51,600, I'm at least 51,600. Okay, you got to be careful on that. The but less than does not include that number. All right, so 1B, determine the tax for each of the filing status taxable income amounts listed. So if you are head of household making $51,779. So we need to first find which interval do I fall in. 51,779. Do you find it? 51,779 is going to fall here, that interval. And if I'm head of household, which column is that? The last one. So $8,006. Guys, we're not looking at the packet right now. We're just using this one right here. Cole, can you put that away, please? Thank you. All right, married filing jointly. So again, we got to figure out where this is. So 51,223 is going to fall in here. And if I'm married filing jointly, which column is that? Good. How are we doing so far? See, tax tables aren't too bad. Express the tax table line that would be used in compound inequality notation for a taxable income of $51,777. Right? Compound inequality notation. Do you know what inequalities are? Yeah, little Pac-Man. Right? We know this. Less than, equal to. Yeah, there you go. I call them Pac-Man because they're easier to make Pac-Mans out of. All right. So first, let's find where does this fall? 51,777. Got a lot going on. 51,7. I did have that circled, didn't I? All right here. So that's the interval, right? So how do I write it in the correct notation? Well, at the top of that, it told me at least and then but less than. So I need to fall in between here. My income needs to be in between those two numbers, and we'll talk about the signs here in a minute. Okay? If I fall in between there, my income, I'm going to use I, needs to be in between here. What does it have to be compared to the 51? It has to be less than that one. What about between this one? At least, that has the equal to part on it, right? The income needs to be greater than that. You have to read it backwards. The income needs to be greater than or equal to this. But since I'm reading it backwards, my sign's actually flipped. Right? Because Marissa, I know you were just reading it that way. Right? My income needs to be greater than that. But if you flip that, it flips the other way. So as you're writing intervals, to make things easy on yourself, they'll always look like less than symbols. Okay? They're going to go the same direction. The first one has the or equal to because it said at least, which means it could equal that. The second one is just a regular less than because it says but less than. I can't equal that one. Okay? So don't panic on those. That should be pretty easy. You're just putting symbols in there. Okay? So that's your inequality notation. No. Like I said, it's not too bad. All right. How about 1D? Given the filing status and the tax, identify the taxable income interval. There again is that income interval. It's got the inequalities on it. That was used to determine that tax. So can you find tax that is for a single $9,275? Okay, so you want to look at the single column, and I'm trying to find 9,275. Good. So you're just writing that interval for me. 51,700 less than or equal I less than 51,750. It's literally coming, I found that, so therefore it's attached to that interval, and I just write it as an inequality with my I in the middle. So my income needs to fall in between there. That's what it's looking for. Less than or equal? Less than, the way to read these, it kind of looks like a squished L, right? L for less than. Yeah, I just wanted, that's how I always remembered them. See, Pac-Man. See? Because look, it's Pac-Man. So easy. Yeah, so does Pac-Man. It's faster and easier to make Pac. You want Ms. Pac-Man? Look, now it's Ms. Pac-Man. That's more fun. All right. And then how about head of household, 8,019. So again, we go to head of household, 8,019. So follow that across to write your inequality that time. Questions so far? Xavier? They're always less than signs. Always. The first one has the equal to on it, the second one does not. And it's based on this. Because at least means it could include it. That's why it's got the equal to underneath it. But less than has to be a regular less than that number. Why is it just a less than? Because of this right here. Because it says, but less than. Literally, I'm just reading it. That's what it says. All right, Maria and Don are married taxpayers filing a joint return. Their combined taxable income is $153,900. The IRS offers a tax schedule so that taxpayers can calculate their tax. Use the tax schedule below for married taxpayers filing jointly to calculate Maria and Don's tax. So instead of using the table like we did, sometimes they give you something that looks like this, which is called a tax schedule. So they make $153,900. So let's go ahead and figure out their tax. So where do they fall here? Good, they fall into this one, right? They're here because they make $153,900. Guys, I need all eyes up here. I need you guys to focus, pay attention, okay? So according to this tax schedule, we can figure this out. They fall into this right here, right? Over this amount, but not over this amount. Okay, then the tax is, so for them, it's going to be $25,550 plus, let's go ahead and write this out because it'll make more sense. $25,550 plus 28%, so 0.28. Now read up here, it says of the amount over something. So over this amount. How do you figure out how much over they are? You subtract it. So you guys, I don't know about you, but I want to do this all in one step. So I'm just going to type this whole thing in at once. So they make 153.9. I ran out of space, sorry. Minus this over amount that they gave here, 131,450. So in my calculator, I would just type all that in at one time. It's going to be way faster, way easier. Plus, we're going to look at some algebraic ones here in a minute, and you're going to need to know this process. You knew it was coming. So 25,550 plus 0.28 parenthesis 153,900 minus 131,450. So how much tax did they pay? $31,836. Right? I mean, you stop and think about that. If they made $153,000, $31,000 of their income went to taxes. You will. That's a car payment? Not a payment. That's a very nice car. Yeah, you could. All right, for what taxable income would a taxpayer have to pay $9,792.25? This we need to kind of stop and think for a minute here, guys. All right, so for what income, so this I'm solving for the income, would I have to pay over $9,000 in taxes? Can you tell where you would fall based on what they told me the tax? So which column should I be looking at right now? What? This is the income. This is income. They gave me, this is tax. So the tax is, I need to fall here. Where does that fall?
Between
You said 35%? That's 96,000.
between 131,415 and 205,000.
Take a look. That's 9,700 something, so it's not this one.
They're not the one.
It's this one. Because it's going to be this tax plus a percentage. Right? Like I'm trying to find, when they give me just the tax like that, like where does it fall? It's way more than this one. It's just a little over that one. It's not that one. So it's got to fall into this one right here. So we need to try to figure out the income. Let's kind of take a step back, look at what we did on the last one. The last one, we took, where did the 25,550 come from? Came from here. Yeah, so I already determined it goes here. Let's write this down. It gave me the 8,962.50 plus 25%, so 0.25. That all just came from me recognizing that's where it came from. Now on the last problem, we did the same thing, and then what went in my parenthesis?
How much they made?
X. Good. How much they made was in that last one. That's what I'm trying to solve for. And then we subtracted that number there, 65,100. And what should that equal? Okay, so we set this up just like we did the last one, except in this case, I did not know how much the income was. That's where the X goes. Right? You found where it went. These numbers are right here, and then it says of the amount over, which before we took our income and subtracted that number. So my income minus this number, and it should equal the tax they gave me. And then we just solve. What do we do first? Yeah, let's distribute. So 0.25x minus 0.25 times 16. You try and do it in your head, Josh. All right, so all I did right there was distribute. What do I do next? Collect like terms. We have this and this. Yep, so we're going to subtract that. So that gives me negative 7,312.50 plus the 0.25x equals this. Good, we're going to add that over there. So 9792.25, add 7,312.50. And then we divide. So how much money did they make? They got taxed at? They made $68,419. Yeah, so that's not as scary, right? Some of those amounts were. Whew. Wow. Not right now. Guys, how are we feeling with that? That's our algebra for the day. Are we okay with the algebra? Not right now. Noah?
Hey, can I bring in pie?
You won't even be in this class. That's March. You won't be with me in March. All right, example 3. The IRS includes the tax schedule for information purposes only, guys. For taxable incomes over $100,000, taxpayers must use the tax worksheet. Okay, here is a portion of the worksheet for married taxpayers filing jointly. Calculate Maria and Don's tax using the worksheet. So how much money did Maria and Don make? Look at the last problem. Last problem, we talked about Maria and Don. Was it 153.9? 153? I just want to make sure I could remember what it was. All right, that's just based on the last problem. It's still talking about Maria and Don. All right, so they made over $100,000 together. So they have to go through and use this. Because if you look in your booklet that I gave you guys, how high does it go up on the tax tables? Grab your booklet, go to the end. What's the highest? 99,000. So once you hit 100 and over, you have to do the calculations. Okay, there's no tax table for it. So that's what we're looking at here because they made more than that. All right, so here we go. So we're supposed to figure out, calculate their tax using this worksheet. This worksheet is pretty simple, guys. Just read the tops of it. So they made $153,900. So we got to figure out, again, where do they fall? Second one down, they're falling right here because they're over 131, not over 200,000. So this is where they fall. So it says enter the amount from line 43. We don't have all of those worksheets in front of us yet. We'll get there. But they made $153,900. So that's what would go right here. $153,900. Okay. They try to make this stuff foolproof so that even the not so bright person can figure this stuff out. Okay. It says multiplication amount. Okay, you're going to multiply it by 28%. And they even told you it is 0.28 for those of you who don't know what that is. You guys should know. And then it says, for part C, it says multiply A by B. A by B. So go ahead and grab your calculator. They literally just want you to type this in. Multiply them together. And that's what goes here. 43,092. And then what's the next part I'm going to do with it? Subtraction amount. And then it says at the end, subtract D from C. Enter the result here. Okay, so I'm going to then subtract 11,256, 31,836. Now, this is like the schedule, what do they actually call this thing? A portion of the worksheet, because you made over a certain amount, so there's no tax table for this one. So if we're looking here, if you go back to the last problem that we did, isn't that exactly the same amount we just got? Yeah. So it's again where all this is coming from. It's done in just slightly different way, but they make those worksheets so you can calculate and figure that stuff out on your own. It's very simple, very basic, right? It's very easy. There we go. All right, last one. Ooh. Come on. So Davida and John have a taxable income of $118,675. Use the married filing jointly worksheet above. It's below, sorry. To determine, I copied and pasted out of your book. To determine the amounts for the columns A and C. So this is pretty much doing the same thing that we just looked at. So they make $118,675. So where do they belong on this worksheet? First one, 118,000 is going to be right in here. So they're falling here. So what do we write in box A? 118,675. I'm going to do what with that? I'm going to multiply it. 118,675. Multiply that, and it's 25%. Right? And then subtraction amounts. So then we're just going to subtract that off. So their tax will be $22,356.25. All right. How are we feeling with everything so far? Don't like it, but understand. I'll take that.